Hi, this is John Brixon with Old Capital, and this is What's the Deal? Today we've got John Krebs with the Multifamily Group talking about Shadowood, a 60-unit property located in Garland, Texas. John, thanks for coming on.
Thanks for having me.
So getting started here, we'll just go through a quick agenda. We'll give a speaker introduction, talk about location, market, go into the property details, value add plan, rent comps, go through the pro forma, and then also at the very end, we'll talk about financing. So John, if you just give a quick introduction on yourself and your group, the Multifamily Group.
Sure. We are based here in Dallas, but have an office down in Houston and are in the process of trying to expand into some other markets. My partner, Paul Yazbek, and I started the company at the beginning of 2018, and we've grown to about 16 brokers here. And this year has been really strong. I was looking at the numbers yesterday, and we've closed 13 deals in the last 90 days. So the market's really active right now, and that's from all over. That's Houston, Louisiana, Oklahoma, San Antonio, DFW. But anyway, it's a great market right now. So happy to be bringing out some more properties for people to look at.
Congratulations, you guys are having a great year, and happy to be working with you guys on some of these transactions. You got some interesting ones here in DFW, including this property, Shadowood, that's currently out in the market. So maybe John, first talk about location of Shadowood, 60-unit property. It's in Garland. Tell us a little bit about the area.
Yeah, so Garland is just northeast of Dallas. You can see there on the map, just northeast of the Lake Islands neighborhood. This part of Garland was developed, in the 60s, and there's a good amount of workforce housing there, but the market's very tight. I think the reason for that is that you're really close to 635, which there's a giant industrial park there that stretches for a couple of miles with just hundreds of manufacturing, distribution centers, all kinds of major jobs. And then as you get further to the west, you've got the telecom corridor, TI, and a lot of businesses, services that support folks that work in Richardson there. So a lot to like about the area.
Yeah, here's some more nearby economic drivers. What I would say about Garland is it's it's an area where you have close proximity to 635, so you can get east and west pretty easily. Decently close proximity to 75, and really between 75 and 30, so you can go north or south, pretty easily. In George Bush, so it's a very popular place. If you want to live on the north side of Dallas and also want affordable housing, Garland's a great location for that. And you've seen it in the numbers. I mean, I think we'll talk about this later, but 4% annual rent growth in this submarket since 2015, according to CoStar. So on this map, we're seeing University of Texas at Dallas. Texas Instruments is not too far away. State Farm Insurance, Richardson College, and then also just what's not included, as John had mentioned, is there's a very large industrial and warehouse market up here in this area as well. That also is a big job creator. Anything to touch on location, demographics?
Sure. A lot of people that we talk to this is one of the first things that they look at, and kind of I'd say a good benchmark is $40,000 within a 1 mile for the median household income. This one's got 46.5. You go out to the 3 mile, it's 52. So, the folks that live in this area can afford to, pay $1,100, $1,200, $1,300 rents, and that's where they're at along Jupiter Road, and this property in particular is all bills paid. So we think that there's even some extra room to go up in the rents because of the fact that the people know exactly what they're getting each month, and there's not a lot of extra. They're not rubbing anything back. Everything is, um, the people know exactly what they're going to pay each month, regardless of usage. And so we think they're, like you said, 4% rent growth in the last, year over year for the last, 6 years. And we don't see that slowing down any because of, what's going on with housing right now and supply, and then demand from, folks moving to DFW.
Sure. So maybe let's talk a little bit about the property details. It's older property, 1964 property, but overall seems like it's in pretty good condition and limited deferred maintenance here.
Yeah, the roofs are a nice architectural shingle. They were replaced about 3.5 years ago. The average unit size is pretty decent at 800 square feet. It does have a 2-pipe system, but that was replaced in 2018. It's got copper wiring. It doesn't have the Federal Pacific stab block breakers or Zinsco panels that people worry about. Insurance companies don't like, Fannie and Freddie don't like. One thing I want to point out here is that this, we've corrected this since you made these slides. The parking, it's not that generous with the parking spaces. There are only I'm working on still getting a final count of those, but there's not 150 for 60 units. That was a mistake. So apologies on that. But yeah, it's a really nice property. The owner's painted it. He's renovated some units. He's done a little bit of water conservation and kind of proved up, that the sky really is the limit in this market for as far as rent growth.
Okay. And on the roofs, we have pitched roofs here too, right?
That's right. Yep. All pitched and all replaced, with a really nice shingle here about 3.5, 4 years ago.
So here's some the unit interiors. So looks like you got, and this double asterisk, I believe, is saying in some of these units that these items are in here. So you got,
Right.
backsplash, black appliances, two-tone paint. You have the flooring, ceiling fans. Any idea, John, how many units have these upgrades and how many units are still in what you call classic?
Sure. Yeah, about a third of the units have been upgraded like this, and they've even put in, and this I think is one they've put in. There's a couple of units, just a couple that have some hard surface countertops. I think those are them there. The rest are Formica with refinished Formica. So they've done about a third. But what's interesting is I was out there yesterday talking to the manager, and she said basically that where the classic units are today, folks are renting those and renewing those at where their upgraded units are. So they really haven't been able to, raise the rents fast enough. And the rents on just the classic units have gone up so much since these renovations were done over the last 3 years that now everybody's at market. So I told her, well, I think it's time to go up on the rents.
So you were saying that the classic units now are running at the same level as the renovated units?
Right. So
Okay.
what he was getting 3 years ago for this renovated unit, the classic units are now renting for.
Okay. Wow.
Yeah.
Yeah. Huge demand for rental product out here for sure.
Yeah. Well, you look at, if we talk about 4%, the rents are $1,000. They're going up $40 a year, $40 plus for the last 5 years. So that $150, $200 premium that he was getting, in 2018, 2019 is now, just the market for the classic units.
Right. Okay. And
Yeah.
community amenities here looks like it's, centrally located within walking distance of some retail, including restaurants and supermarkets. Um, looks like I can't tell if this is a playground here in the middle or what this thing is, but maybe time for an upgrade on that.
It could, yeah, there's not a lot. I was asking the manager again yesterday, kind of what she would do if for the residents as far as amenities, because they do have a couple of these open courtyards. And she said, the kids are out there. There's a lot of families at this property, a lot of kids, and they're out there playing soccer, playing volleyball all the time. And she thinks, some sort of a cage sports court, something like that would be a really good amenity. Um, you know, yeah, right now there's not a lot of amenities here, but they are, you know, they've got two vacant units out of 60, so um, the amenities aren't necessary to attract and retain tenants. But I do think it would be something that a new buyer could put in and possibly even get more rent.
Right. I think one thing about this property that's somewhat unique is that it's a little bit less dense, or seems to be less dense than some of the competing properties on Jupiter. I did the loan on the property called Whisperwood, which is about two doors down on Jupiter, and that property is very tightly packed in. There's limited parking. There's a small courtyard, but here it seems like you've got some more green space, which is nice.
There is, and I think that's why there's a lot of kids and families at this property. There's a lot of room for them to run around, um, just like you said. Now, and what's interesting, what you're looking at here, there's also 4 of these kind of townhome units. So we'll look at the rent roll more in a little bit later, but that are 2-story. Yeah, there they are, 3-bedroom, 2-bath townhome units that are 2-story and have those outdoor private yards. If you'll flip back one, John, that's what we're kind of looking at across the courtyard. Those are 2 private yards there for the townhome units. And I also want to add, there's another unit that right now is, down. It's not part of the 60 that could be, it's right now, basically it's just a storage shop for maintenance, kind of a catch-all. I went there yesterday. It's got, ceiling fans in it and a ladder. They're just storing stuff in there. It needs to be completely redone, but it could be, another unit.
What kind of is that? Is that a 2-bedroom? Is that a 3-bedroom?
I don't know. That's a good question. It looked like it's probably a 1-bedroom, but I'm not exactly sure. I didn't really get all the way into it. It was kind of, jam full of stuff, but that's just another
Sure.
value add opportunity that I saw
Yeah,
when I was out there.
absolutely. Okay, and then anything else here on the floor plans? Looks like you've got a pretty good mix here. It's mostly 2 beds, 810 square feet. But anything else to add here on the unit mix?
Just that, the rents are um, high like this because the property's all bills paid. So the residents aren't, there is no electric bill, there's no water bill, there's no gas, and they do have gas stoves. People like to cook on gas, and this property has that. So the residents are getting all of their utilities taken care of in this rent.
Yeah, no, I think it's actually a pretty good value. You look at the 2-bed, 1-bath, $1,100. Your annual or your monthly utility bill is probably about 150. So your effective rents here for this 2-1 are 950.
Exactly.
Which is within people's budgets. So value add plan here, just talking a little bit about, there's the carports and, the cable and internet bill back, water conservation.
Yeah, I want to focus for a minute on the water conservation. That's the biggest one there. And sorry, give me one second here. I've got this proposal here from a water conservation company, and it's showing about, yeah, I guess, it's some of this is already baked in here. So that's probably a little bit heavy on the water conservation savings, um, because he's already done a third of them, replaced the toilets and the aerators. Um, but I do think there's lots of other things. Like I mentioned, you can redo the unit, um, above. It's the unit above the laundry room. The parking, they're charging for reserved parking right now, but it's I want to say $30, and the other properties around there are getting $40. Um, so several little things you can do, just what I that don't cost a ton of money right off the bat.
Sure. Talking about rent comps, I mean, it looks like, Shadowwood is kind of just in the average, or about average for the submarket. Would you say that's right?
Yeah, and these are the comps. I mean, because these are the properties next door, right? I mean, you mentioned Whisperwood, two doors down. Jupiter Place is next door. Um, I believe Hickory is next door to Whisperwood. So these are, the properties that are all right there. And really, we just wanted to show that, there is a little bit of room on the two bedrooms, and that, Whisperwood's probably getting the most rent. And so if you compare just, Shadowwood just to Whisperwood, they're getting 50 to, $140 more in rent.
Right. Okay. I know Whisperwood well. Did the loan on that one. So, all right. So here's Jupiter Road, where it is a lot of these, 30 to 100 unit size, 60s built multifamily properties all up and down Jupiter. And so that there's your comp list. Um, Makes it pretty straightforward to underwrite this transaction, or to at least look at and know kind of what does the market look like for rents, or where can you take rents.
And I think, you mentioned it, the underwriting is the most important thing. And, what kind of returns can an investor make on this property? And so, that was, I know one of the things that you liked about it was that it sizes really well for agency debt.
Yeah, no, absolutely. Um, so probably don't need to go into deep dive here on your underwriting. Um, Based on, I think, some of these assumptions that you have, I think are pretty reasonable. I mean, you have payroll at 1,200 a month, which I think is fair. Looks like you've got marketing at 50 per unit per month, and admin at 150. So anything else to add here on the underwriting, or just the expenses?
Yeah, just that we lowered that utility bill a little bit with the water savings. And we usually will look at taxes at about 80 or 85% of purchase price. So here we've raised the taxes up almost double. And the thing, still cash flows really well.
Okay. Who's the current management company?
Devonshire.
Okay, got it. Looks like they're already running it, pretty lean,
They're
but there
they're
could
doing
be
a
some
great
room.
job. They're doing a great
Yeah.
job over there. The manager is very sharp, and and another reason I should mention the payroll is a little bit lower for this amount of units is she's actually split between two properties. They do have a full-time maintenance person, but the manager is actually running another property along with this one, so she spends half the day at that property and half the day at this one. Devonshire's doing or managing another property there in Garland that I'm selling right now called Crossings. It's just down Walnut Street, just a little bit, just around the corner really from this property, and you guys are financing it, and they're doing a great job with that property too. The market, just the whole market in this little pocket of Garland is really strong. So, you can hire a reputable big third-party management company, and they stay full, and you know basically,
And collect
all the investors that
limited
we've put.
delinquency.
That's right. All the investors we've put into properties over there have done really well.
Yeah, absolutely. All right, so just getting to the most important part of the deal here is the financing. And so, John, I guess just before I dive into this, what are you looking at on the whisper price?
Yeah, we're at least 6 million. It'll probably go up, north of that, but that's kind of my guidance is, as and that really begins here with you and the debt that, this is in Dallas County, so it's a 1.2 debt service coverage. Right here at 6 million, it's sizing at 80% on that 5-year hybrid, 76% on the 7-year fix. So that's why I think that it'll trade for at least 6. And capital wise, the property's in good shape, so I think it's a really good opportunity for somebody.
Yeah, so this is somewhat unique in that I really have not seen many deals underwrite for 75 to 80% agency financing on the whisper price, at least in the DFW market, here in the last 6 months. And so, on this property, we're looking at it on Freddie small balance. I think Freddie small balance is the way to go here. They have been a lot more competitive than Fannie small more recently on just their rates have been much lower. And then also the Freddie small balance program, as John had mentioned, for properties in top markets, and Dallas County is considered a top market. They can go to a 1.20 debt service coverage ratio. COVID-19 reserves have largely gone away in the market. And so, most likely not having to deal with those on this acquisition, which should help cash on cash. And yeah, on the 5-year option, with step down prepay, 5, 4, 3, 2, 1 prepay, we're looking at a 3.09% interest rate. And I included step down prepayment options here. There is also yield maintenance. I always recommend, if you're buying a smaller property and you're financing it with Freddie small balance, always take the step down prepay, the 5% in year 1, 4% in year 2, 3, 2, 1 for the 5-year, and then 5, 5, 4, 4, 3, 3, 2, 2, 1, 1 for the 10-year. But take the step down, even though you can get a lower rate with yield maintenance, your rate would be 15 to 20 basis points lower if you take that yield maintenance prepayment penalty. But you don't want to be in a situation where you're not able to sell the property if you want to after 3 years because you have a Freddie small balance loan that has a yield maintenance prepay on it.
Or refinance it, John.
Or refinance it. That's right. And I've done refis, plenty of refis where I've refied an existing Freddie SBL loan with a step down prepay with another Freddie SBL loan. So
right. cash out refi.
100%. Yeah. So yeah, very good options here for financing, bridge loan. If you really want to do a bridge loan, you could, but on this, I think the way to go would be with a Freddie small balance loan with a step down prepay. And this is our underwriting here. So we, just comparing the April financials with the in place is our underwriting. So, we're looking at this net rental income. We're on the in place rent roll. The in place rent roll is actually a little bit lower than the trailing 3 net rental income. So we took in place, which is a little bit more conservative way to look at it. Trailing 12 other income, we're underwriting taxes at 80%, insurance at $500 per unit. And this is, using the 5-year rate at 3.09%. We're at a 127 debt cover, and 120 is our minimum. So we actually have a good amount of room here on the 5-year option. The 5-year money with Freddie small balance right now is super cheap, very low rates. So yeah, with good leverage and a 5-year Freddie small balance with step down prepay, it's you should have pretty good cash on cash walking into this thing. So with that being said, we can wrap this up. John, thanks a lot for coming on today. Any questions you might have, reach out to John or myself, John Krebs or John Brixon. And yeah, that's all we have. So John, when is call for offers? When can people schedule tours? All that stuff.
Sure. We're right here in DFW, so we're doing tours as needed. Give me a call or send me an email if you'd like to take a tour. The call for offers is going to be June 30th. So today's the 11th. So, we've got a little over almost 3 weeks, 2.5 weeks. And then just real quickly, I would encourage people to go onto our website there, multifamilygrp.com. We just rolled out, I want to say, 4 or 5 listings in the last few days. And hopefully you'll let me come back and talk about a couple more.
Yeah, we'll be talking about the Waco property, I think, next week. Good. And then hopefully some more after that.
Excellent.
So, all right, good stuff. John, thanks again for coming on. I'm John Brixon. Thanks for watching What's the Deal?